You've heard of the dogs of the Dow. Well, now I want to talk to you about the gnats of the Nasdaq, the worst performers in the Nasdaq 100 for 2023. Just like the dogs of the Dow, maybe, just maybe, there are some quality stocks here that are ready to make a comeback. Now, the worst performer in the Nasdaq 100 last year was none other than Moderna, which I highlighted last night because it was also the fourth worst in the S&P. So we'll start with the second worst then. You know what? We're going to start with this company called Illumina. It's down just over 31%. The company makes diagnostic equipment. It's a leader in DNA sequencing. And on the surface, it's very similar to Moderna because it was a huge winner during the pandemic that failed to find its next act. However, the Illumina story is a lot more complicated. The company's been in this weird state of limbo for a couple of years now. In 2020, they announced the $7 billion acquisition of a company called Grail, which makes screening tests for multiple types of cancer. I was very excited about this deal. Closed in 2021. But then the FTC and its European counterpart challenged it after the fact. Since then, they've been fighting it out in the courts, with Illumina only losing to the FTC in a federal appeals court last month. Big decision. The next day, Illumina said it would sell the Grail business, which was actually a positive catalyst for the stock, which has been rebounding like crazy from its November lows. If the Grail saga was the only problem for Illumina, I'd be tempted to kick the tires here. Unfortunately, it's not. Last year, Carl Icahn, the famous activist investor, entered the fray, launching a proxy contest and urging the company to sell Grail. Fire the CEO and then make some major changes. He was partially successful. He got one of his people on the board last May, and the CEO was pushed out shortly thereafter. Back in September, Icahn said the new CEO, Jacob Thaysen, had his, and I quote, full support. But after the court decision in the Grail divestiture last month, we started hearing reports that Icahn might launch another proxy contest to take control of Illumina. Maybe he'll win completely this time, and it'll certainly be good for the business. For me, though, the story's still too uncertain and too messy. TD Cowen just downgraded from outperforming the market performance this very morning. They're still optimistic on the business, but don't like the risk-reward given how much the stock's run from its November lows. I say, gotta wait for more clarity here. Third worst performer in the Nasdaq 100 is, well, let's talk about Red Hot Griddle, Walgreens Boots Alliance. I covered on Tuesday because it was also the worst performer in the Dow. While the company reported a better-than-expected quarter this very morning, it also cut its dividend nearly in half, crushing the stock. That said, you know what? I was actually encouraged by the strong numbers. See the dividend cut as a rational move by new CEO Tim Wentworth. Might be worth a second look here, especially now that the stock's been obliterated. I have to tell you, I am very intrigued about Walgreens right here. Mostly because Wentworth is a total pro, seasoned operator. I like that. Next on the Nasdaq Nats list, we've got multiple utilities. There are only 4 utilities in the entire index, yet 3 of them were among the year's worst performers. Exelon down 17%, the 4th worst performer. American Electric Power down 14.5%, 5th worst. And XCEL Energy, XCEL Energy, down nearly 12%, the 7th worst performer. I'm not surprised, given that these are all dividend stocks and the yield plays got killed last year, thanks to the relentless rise in interest rates, at least until they peaked in October, and the whole situation turned around. If you believe long-term rates have truly peaked and the Fed's ready to start cutting short rates, then this could be a great year for the utilities. Now, the worst of the group, Exelon, actually didn't bottom in October because the stock got hit again in December when they got an unfavorable rates decision from the state of Illinois. Very troubled, let's say it's just a hornet's nest when it comes to the government there. One of their most important markets is the parent company of Chicago utility ComEd. Exelon stock fell from 41 to 34 in response, although it's now rebounded at $36. I do think this is a solid company operating in some strong markets like Philly, Washington, D.C., and Baltimore. Stock now yields just under 4%, but the Illinois decision was a real negative, a shocker, frankly. So let's see how much this hurts Exelon's earnings before we pull the trigger here. Now, I feel much better about recommending American Electric Power, AEP, even after the stock's rally from $69 and change to the mid-80s today. We spoke to AEP CEO Julie Sloat after the company reported a really good quarter in November. Of course, it didn't matter because all that matters is the Fed when it comes to this stuff. But she did say AEP's strong results were driven by excellent commercial load growth. I like that. Thanks to healthy economic growth in her service areas across the eastern Midwest, as well as Texas, Oklahoma, and Louisiana. You could do worse than those markets. Specifically, Sloat called out data centers, especially in Texas. AEP has an even better 4.2% yield. I think it's a much safer bet right now than Exelon. How about XCEL Energy? All right, I don't follow these guys closely. They serve 3.8 million electric customers, 2.1 million nat gas customers across 8 states, upper Midwest and Southwest. I do prefer American Electric Power, but XCEL seems fine, even if it's only got a 3.25% yield. While it's not my favorite, it's a winner if the interest rates keep falling. Finally, the 6th worst performer in the Nasdaq 100 was PayPal. PayPal. Yeah, down nearly 14%. While there are all sorts of tech winners in 2023, few fintech stocks participated in the rally. And by the way, in 2024, it's all regular fins, not fintech. Frankly, I have a bad history with PayPal. We used to own it for the Chapel Trust, then sold it at a loss nearly 2 years ago when the stock was in the 80s. It was tough to swallow at the time, but given that the stock's now fallen to the high 50s, selling was clearly the right thing, even though buying it was horrendous. Hey, look, when I talk about my winners, I got to talk about my losers. PayPal's a loser. You can make an argument that PayPal's become cheap as the stock now sells for just 10 times this year's earnings estimates, but I don't know. It could be a value trap. Company also has this new CEO, Alex Chris. He's recruited from Intuit. That's a company I like very much. But I can't make a good fundamental investment case for PayPal right now. At the end of the day, their core digital payments offering is no longer special. They're being challenged by Apple, Amazon, two companies it's very hard to compete against. Meanwhile, PayPal never really found a way to make much money off this Venmo, its popular peer-to-peer payments platform that's now going up against Block's Cash App, not to mention Zelle, which is owned by a consortium of old-school banks. Yeah, they got into buy now, pay later, but I got to ask you something. Who hasn't at this point? Best thing I can say for PayPal right now is that Alex Chris should come on the show and tell us why he thinks the stock should be bought. Until then, I say sidelines. Bottom line, we've now gone through the best and the worst of the Dow, the S&P, and the Nas. So now you know where we're coming from. You got a better idea of what might work in 2024, which is the real $64,000 question here. Nasdaq Nats. Indeed. Or Bill in Arizona. Bill.
Yes. Booyah.
Booyah, Bill.
Yeah, I'm interested in two banks. Banks have been a dog for the last year, but they look like they're coming back. And I've got an interest in Citizens Financial, CFG, and Key Corp, KEY. And I was wondering whether it was time to hold, buy, or sell. I
want you to buy Key Corp. Citizens Financial is a little too murky. Key is a very good neighborhood. Really, I love the area because it's a big footprint. I think I like the dividend, and I think it's very well run. Citizens Financial is kind of a little too opaque for me, so to speak. Let's skip that one. All right, now that we've gone through the best and worst names from the major indices in 2023, I hope you have a sense of what might work this year, because that's the big question moving forward. Much more mid-money in. Early next week, we're going to be heading to the JP Morgan Healthcare Conference in San Fran, where we'll be talking to the CEOs of Walgreens, CVS, Eli Lilly, and many more incredible names. So before we head out there, I'm going to get a preview of what we can talk about, what we're going to see from JP Morgan's best healthcare analyst, Lisa Gill. Then France's largest grocery store, Carrefour, is doing away with PepsiCo products, setting high prices. So could this be the beginning of what it takes to bring down worldwide inflation? I'll give you, at least at the grocery store, I'll give you my take. And all your calls rapid fire in tonight's edition of the Lightning Round. So stay with Cramer.